Welcome to Markets Now. I'm Clinton Griffiths in for Michelle Rook today, talking with Ted Seifried of Zaner Ag Hedge. Ted, as we look at Thursday's trade, a pretty volatile day. Started one way, ended up kind of trying to hang on and maybe, recover a little bit here. Let's start with corn. Talk to me about what's going on with this corn market and what Thursday you saw as far as in the cards on Thursday.
Yeah, absolutely. So corn, Clinton, is almost exclusively a weather market at the moment. Go back 3 weeks ago, we were talking about demand fundamentals and how poor our export sales were, what the prospects were for ethanol, lack of animals on feed, things like that. But then when you have really no rain for 2.5 months,
Right.
we really have to focus on the weather and the supply side of things, and then demand becomes an afterthought. And so when we walked in on Thursday and we saw a wetter forecast in that 6 to 10 day outlook, we put some pressure there on corn. And some of that was spillover from what was happening in the soybean pit, but we saw corn kind of sell off. Now, throughout the day,
Ted, talking about the forecast, this isn't the first time we've had wet weather in the forecast, right? But it doesn't always materialize here this spring.
right, and that's exactly kind of what happened throughout the day, Clinton, as we picked ourselves off the lows, because we've had these chances in the forecast, especially the longer term forecast, 7 days and out, right? The 6 to 10 or the 8 to 14 days. But as we get closer to them, that rain starts to fall out of that forecast, or it just completely disappears. And even if there is still a chance, even though a lesser of a chance, we've been disappointed by what we've got, and we've just continued to watch this drought monitor get worse and worse and worse, even though a lot of the weather forecasters have said that there was going to be a weather pattern change. We've been waiting 3 weeks for that to happen, and it just really hasn't seemed to come to fruition. So for corn, we need that pattern to change now. And if that rain in the 6 to 10 day forecast actually happens, we can start to feel like maybe that will save what's left of the corn crop. If it doesn't happen, we really can't trust any forecast that we see, and we really can't feel very confident about a weather change happening, especially not in time for the corn market. So, the next 10 days of weather are going to be extremely important. And I kind of don't think that the corn market's really going to feel very confident in any forecast until actually rains hit the ground.
Yeah. How do we close on Thursday? Because, we've had a pretty decent week overall as far as, seeing a little bit of that movement up and higher.
Yeah, absolutely. We took, just to recap, long weekend. We came back on Tuesday. We were kind of mixed on Tuesday. Really not a big movement in it. Well, by the time we were closed on Tuesday, not a whole lot of changes. But then Wednesday was a really rather big up day, really kind of led by corn. And really towards the end of the day, we gave back some of those gains on Thursday, but still have a very nice week, as you mentioned. And the way we closed on Thursday, really bouncing off our lows fairly well, it makes you feel like there could be some more strength coming on Friday. Now, of course, it's going to depend on what happens in the weather forecast and what that forecast says. But if it takes that rain back out, oh boy, look out. There's going to be a lot of excitement and a lot of movement there on Friday. But yeah, you don't get the feeling that Thursday was necessarily the end of a weather rally. At least it didn't have that look to it on a chart.
Okay.
It didn't have that feeling to it with the price action the way we trade from about 10 o'clock on.
All right, let's talk soybeans a little bit. Feels like maybe also weather is important here, but we're not in August. We're not quite as concerned about weather with soybeans just yet. What else was at play here with beans?
Yeah, so, weather is in play with beans just from the standpoint that if we don't get rain through the month of July, rains in August might not really make the soybean crop. And then also, it's a question of a weather pattern change or not. So, yeah, soybeans are paying attention to weather, but there are other things in play for soybeans. For example, the EPA's proposal. That was a big disappointment for the soybean market as a whole, but the soybean complex, in particular soybean oil. We were limit down really for like the first 7 months in soybean oil there on Wednesday. It carried over into Wednesday night into Thursday early in the session, but soybean oil did come back towards the end. In the meantime, we've really put a lot of pressure on crush margins. We have crush margins sort of at the lowest levels they've been in, I think, over 3 years now, Clinton, which doesn't make us feel all warm and fuzzy about demand, even for old crop soybeans, just between now and the end of the marketing year, and then certainly for next year as well. So we are still paying a bit more attention to demand. We're not full-blown weather market for soybeans yet. I mean, we're kind of going back and forth on that. And you might argue that soybeans really found a lot of strength just here last week and then again on Wednesday. Maybe we've kind of gone a little bit or had gone a little bit too far on a weather trigger or weather rally in soybeans. So I think giving back some of that weather premium on a weather forecast on Thursday made a lot of sense.
Yeah. As we talk about kind of the impacts grains ended up having in our protein sector, let's start with the cattle side of things. Seeing some movement there based on what we saw on grains. I mean, what do you put together there as you're watching this action right now?
Yeah, of the livestock complex, the feeder cattle are the worst looking chart you got out there, and a lot of that is a direct reflection of the very substantial strength that you've seen in corn just in the past 2 weeks. That has feeder cattle concerned, as it should. We don't have a whole lot of pasture out there either, so when feedstocks are skyrocketing, makes you really worried about what the future is going to be for feeder cattle. So that makes sense. The other thing that we've had for the cattle complex is that cash had been really hot and heavy, which a lot of times is the case. You have packers really trying to fill a lot of their demand early and late spring into early summer in order to kind of satiate the domestic demand that we have throughout the summer. But then once they get pretty full up on their bookings, they start to kind of take a little bit of a step back. And they also know that, as consumers, we come out of the gate hot and heavy. Our demand for beef really is the strongest in the beginning of the summer as compared to when we get past July 4th. It picks up again as we get into the Labor Day weekend, but we get into those sort of summer doldrums where we're not outside grilling as much. It gets really hot in a lot of places in the country. So there's that little bit of a lull in demand. And it feels like packers are bought up until we expect that lull. So I think cash can cool off a little bit more. I don't think there's a whole lot more downside in the cattle market. I don't think that the highs necessarily are in at this point. But we were due for a correction. That correction might be a little bit deeper than what some people's likings are. But ultimately, I really do think this is more of a correction. And we will, I think, very likely get back up towards those highs once again, just because we just don't have the animals out there. And I don't see anything out there right now, Clinton, that is really deterring domestic demand, such as major recession or something like that.
Right. Yeah, I haven't seen a lot of movement on that front. We've seen a little bit of softening in that surge of inflation. The Smithfield CEO telling Bloomberg this week that he thinks some hog producers may start selling their corn rather than feed hogs because of the current fundamentals in the hog market. What do you see right now as we look at this hog market and lean hogs and where that may be trending here through the rest of summer into fall?
Well, yeah, I mean, you're absolutely right. I mean, look at what's gone on in corn. Corn has been sharply higher. Hogs have tried to follow a little bit, but I think we had gotten down to prices that were below what I'd call fair value in hogs anyways. You had a pretty sizable pullback in hogs on Thursday, but that's because we ran into our 100-day moving average for the first time in a while, and that was a very likely technical point for your speculators to take some profit, and they did. It doesn't necessarily mean that we can't get up and over that 100-day moving average, but a lot of times when we test major resistance like that, we do have a little bit of a pullback. I think, what the Smithfield CEO said about, maybe selling corn rather than feeding hogs, I think there's some credence to that. At least there has to be some concern for that. So I think you have an improving demand outlook because of high-priced beef, and I think you have an improving supply outlook in the sense that maybe supply is contracting because of what's going on in the corn market and comparatively, the price of hogs versus what's happening in the price of corn.
Well, it has been pretty dynamic and a pretty interesting market to keep an eye on. Ted, we always appreciate your insights. Thanks for joining us here on Markets Now. And make sure you like and subscribe to the podcast and follow along. I'm sure Michelle will be right back. Lost her voice today, so I'm filling in for her. Ted, appreciate you being here. Thanks. Good to see you. We'll see you on the next one.
Pleasure's mine, buddy. Thanks.